Hey everyone, welcome back to Corporate Dakota, the place where we make sense of those boring corporate filings and sometimes find a little bit of drama. Today we're diving into an updated report from Verizon Communications Incorporated. This isn't just any update, it is an amendment to a previous filing, meaning something changed after they first reported it. Let's see what that something is and if it matters. And hey, if you like getting these straight, simple financial breakdowns, make sure you are subscribed and join our Discord community, linked in the description below. You don't want to miss out on discussions. Alright, so we're looking at a report filed by Verizon Communications Incorporated. They are a huge name in telecommunications. You probably use their services every day, right? This filing is an amendment to a report they made earlier. Think of it like correcting a typo or adding a detail they forgot the first time around. The original report was about a director appointment, but now they're adding information about that director's committee assignments. The original event we are talking about happened on the 25th of August of 2025. This is Verizon's official filing. They are incorporated in Delaware, and this is their tax ID number. Their main office is in New York City, and their phone number is right there. Now here is a really important part of these filings. This table shows what kind of company stock is registered and where it is traded. So Verizon has common stock registered on both the New York Stock Exchange and the Nasdaq Global Select Market. That tells you how widely available their stock is for people to buy and sell. But it is not just stocks, they have other things called notes. Think of these like loans that Verizon has taken out from investors. They list quite a few of these notes with different interest rates and due dates. For example, they have 1.375% notes due in 2026 and another set of 0.875% notes due in 2027. They have notes due all the way out to 2056. Some of these are called fixed rate notes, meaning the interest rate will not change over their lifetime. And look at this one, a 3.9962% fixed to fixed rate junior subordinated note due in 2056. That is a long time and a very specific type of loan. Junior subordinated generally means that if Verizon has financial trouble, the people holding these notes get paid back after other creditors, but before equity holders. All these notes are traded on the New York Stock Exchange, and their common stock is also traded on the Nasdaq. So what is this amendment actually about? It is really about a change in a board committee assignment. This section covers changes in directors and officers. So back on the 25th of August 2025, Verizon's board of directors appointed Jennifer K. Mann as a director. That was reported in their original filing. At that time, they hadn't decided which specific committees Miss Mann would join. Now, this amended report tells us that on the 4th of December 2025, the board appointed Miss Mann to the Human Resources Committee. This committee usually deals with things like employee compensation, benefits, and overall workforce strategy. It is an important role, especially in a company as large as Verizon. This filing doesn't contain financial tables for analysis, but the information about board and committee appointments, while less flashy than financials, can actually tell us a lot about a company's direction and priorities. The appointment of a director to the Human Resources Committee on the 4th of December of 2025 could signal a focus on talent management, employee well-being, or perhaps changes in executive compensation strategies. It is a subtle indicator that leadership is paying close attention to the people side of the business. It could mean they're preparing for potential workforce changes, mergers or acquisitions, or simply investing more in employee retention and development in a competitive market. The fact that this is an amendment also implies a deliberate and perhaps carefully considered decision to place Miss Mann on this specific committee. It certainly suggests that her expertise is seen as valuable in overseeing the human capital aspects of this massive telecommunications giant. While we don't have hard numbers to crunch in this specific amendment, the underlying story is about strategic human capital management. It reflects a commitment to aligning the workforce with the company's broader objectives. It could be a precursor to significant HR initiatives designed to bolster innovation or navigate future industry shifts. So, while not a typical financial deep dive, this disclosure adds a layer to understanding Verizon's internal strategic focus. It shows that beyond the technology and services, they are consciously shaping their internal structure and talent management. The delayed committee assignment might also indicate a period of careful deliberation to ensure the best fit, which is a sign of thoughtful governance. It is about people, and people are undeniably the engine of any large corporation's success. So looking at this amendment, Verizon is clearly taking steps to ensure its board has comprehensive oversight. The addition of Miss Mann to the Human Resources Committee, even if it is an amendment, suggests a refined focus on the people who make the company run. While this specific filing doesn't offer us financial data to pick apart, it does point to a thoughtful approach to board composition and strategic oversight. It's a sign that the company is actively managing its governance and human capital. What is your take on this committee appointment and what it might mean for Verizon's future? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate insights. And don't forget to join our Discord in the description for even more discussions. Thanks for watching, and we'll see you next time.